Alrighty, everyone, welcome back to this week's video on trading psychology. And this week I want to talk about the psychology of trading success. So I know a lot of my previous videos, and probably most of them, have been on some of the more negative, I don't want to say negative, but more of like the common struggles or the underwhelming aspects of trading psychology, like where some negativity and some bad feelings can be had by traders. So I want to focus this week on some positivity um, for the psychological aspect of trading. And of course, the psychological aspect of trading is the most important part of trading. So when you find success in trading, and I just want to state off the bat, I am a firm believer. I've said this for years. I'm a firm believer that everybody is capable of becoming a successful trader. Okay. Now, your definition of a successful trader is going to be different from the next person. Okay. Try not to give yourself an imprint on yourself, the rich individual with 5 Rolex watches and driving 3 Lamborghinis in Dubai as the image of a successful trader. Okay, there is a multitude of different ways an individual can become a successful trader. And to start this video off, I'm going to talk about what is success in trading. So, obviously, at the very basic concept of success as far as trading goes, is you're able to make money. Now, what does it mean when I say making money? It means on a consistent basis, you're able to enter the market in a trade and consistently win. Your winning trades outperform your losing trades. It doesn't necessarily mean you have more winning trades, but you make more money on your winners than you lose on your losing trades. Okay, at the very basic, concrete level, it just means you make more money than you lose. Okay, now I'm going to throw in another spin on this for what is success in trading. It also means you're able to manage risk. Okay, if you're able to manage the downside in your portfolio, especially if you're an equities trader, okay, if you're able to manage the downside and you're always able to manage or have protection there, whether it's a stop loss or you have the appropriate hedges in place in your portfolio, that is success in trading. Okay, that doesn't necessarily mean that you're making money, but a key part of trading success comes with the ability to manage the downside, okay, to limit your losses. If you're able to do that on a consistent basis, that is a form of trading success, and you will not hear many people talk about that. Okay, instead, what you will find, especially on this, I would say post COVID, like post, I would say February, March 2020, when trading became really popular for the young generation. Trading or success in trading is often associated with money. How much, like literally, how many dollars did you make today? What expensive thing are you buying this month? What trip are you going on this year that you paid for supposedly through your trading profits? Okay, the the glam side of life and the glam lifestyle that trading can bring you is being hyped up, and that can be a bit dangerous for people because that can lead people down to the wrong expectations. Okay, and whether or not some of those people are actually making that money to afford that lush and lavish lifestyle from trading alone is often a difficult question for them to answer. So if you are not, let's say you are not making tens of thousands of dollars every single month, but you are consistently able to pull a couple $100s from the markets every month, every week, every day. If you are consistently able to have your winners be larger than your losers, you are a successful trader. And I want you to take pride in that, okay? Because you might not be making the tens of thousands of dollars now, but in 2 or 3 years' time, you absolutely could because you already have the key foundational blocks in place. And that is at the bedrock level, it is about managing risk, okay? Your losers are smaller, or you're keeping your losses small, and you're capitalizing on your winning trades, and your winners outweigh your losers. Okay, that is the bedrock of success in trading. And if you are consistently able to do that, you are well on your path to making trading what you want of it. Okay, so I want to kick this video off by honing in the fact that part of the psychology of success in trading is being able to protect your downside. Okay, being able to limit your losses. That is such a huge part in your trading career. And if you can enter a trade with a stop loss in place every single time, especially if it's a limit order for my futures traders or again my equity traders, that is a huge part of your trading of your future trading success. Excuse me, I got tripped up over myself a little bit. Okay, there are many people who are not able to do that, and if you are able to do that, you are a successful trader. Okay, and that is a huge foundational block that you have laid for yourself and for your personal growth in this journey. Okay, so moving on, what is stopping you from finding success if you're not already finding success as a trader yet? It could be your lack of personal accountability. Okay, are you journaling every day? Do you ignore where your weaknesses are in the market, and are you constantly funneling your mental energy and your trading capital into trying to fix your weaknesses? There's nothing wrong with that necessarily, but why are you then ignoring your strengths? To me, it would be much more beneficial for you to just ignore your weaknesses. You know where your weaknesses are in the market. Ignore them. Don't give in to, let's say, if trading the open the first hour, half an hour or so, whatever of the day, if that is your weakness, just don't do it. Don't give in to it. Okay? Instead, wait for the first hour of the day to finish, and then you circle back to your desk and you look for opportunities the market's going to present for you. Okay? I can tell you right now from my personal experience, my best days come when I don't place a trade in the first hour of the day. I am one of those people where I find a limited success in the first hour of the day. Okay, most often the first hour, the first 30 minutes or so is going to be the most volatile period in the trading day. Okay, it's when there's the most volume usually for a session, excluding FOMC days and whatnot. But generally my success is limited in that first hour of time. So I take it easy the first hour. Okay, I'm not necessarily looking to place trades. I'm not looking to put risk on in the markets. Instead, I want to wait and see what's going to happen. The worst thing that happens in this case is if I don't place a trade in the first hour is I miss out on a trend day. Okay, that is the worst thing in this case of me not placing a trade in the first hour of the day. And so, by the first hour's close after the IB period is done, I've maybe missed out on 20, 30 points of downside or upside in a single direction. Okay, well, you know what? It is what it is. That's less than 30% of the time in the markets do we see a trend day in the markets, okay? Over 70% of the time, the market is considered a balancing session where the market is trading between highs and lows, usually established overnight, but it's not always, okay? So give in or don't give in to your weaknesses, okay? Take the personal accountability and focus on your strengths, okay? Are you not journaling? Okay, there's no negative. In my opinion, there's no negative that comes from journaling. Now, you can, be too harsh on yourself, and that will in turn not build confidence on yourself, but that's a separate issue in of itself, okay? Make sure you journal every day. Okay, if you're not journaling every single day, or at least every day when you took a trade, you're not doing yourself any favors there, because there can be these little things that you write down in the moment, and in a month later, when you circle back to it, you could have an aha moment and have a sense of aha, like this is what I'm doing wrong, and now I can fix it. And that's a building block. You're able to build on that. Okay, so if you have a lack of personal accountability, that can be what's holding you back from finding success as a trader. A big one, a lack of emotional control, and I'm about to dive into this right now as far as euphoria goes. But a lack of emotional control, if you get angry really easily, maybe you need to change your style of trading, okay? Especially, I would say, in my opinion, day traders or scalpers are the most prone to being angry because they sell too early, for instance, on a trend day, or they entered a position too early because they were anticipating a move was coming that didn't end up coming, and that sort of stuff. If you have a lack of emotional control, or if you have a lack of discipline, that is definitely going to hinder your ability to find long-term sustained success in the markets. All right, so now consequences of finding success in trading. And real quick, this word consequences, it sounds like it's a bad word, but not everything that I'm going to talk about right here is necessarily a bad thing. Okay, because again, this trading success, I don't want this video to be focused on all negatives. Okay. So, consequences of finding success in trading. I'm going to talk about personal experience on this one because this is something I struggled with for probably a good 2 years in my own trading career. Euphoria. All right. Everyone's going to experience a hot streak in your trading career, and it is the most damaging when I consider you a newer trader and you have less than 2 years of experience. And again, I'm coming from personal experience when I talk about this. Okay. When you trade on euphoria, you are going on a hot streak. You're making money, right? You are focused in the now moment in the market, and the trading comes very easy to you. You are able to spot opportunities effortlessly, in real time that the market is giving you, and you don't hesitate when you press the buy or sell button to take a long or short position. Eventually, we are human. Euphoria comes to an end. Okay? Sometimes we're not able to recognize that euphoria has come to an end, and we end up forcing impulse. I call them impulse trades, and they're trades that really don't make any sense based on your strengths as a trader and your system and how you find an edge in the market. And eventually, you will be in disbelief at first that you are taking on a loss. This trade is moving against you, and you're going to sit there and you're going to think, well, it's going to come back in my favor. I can exit for break even, or I can exit for a small profit. Okay, and the trade keeps moving against you and against you and against you until reality essentially hits you like a brick wall, and you're like, well, this is a significant drawdown. I'm going to eat this loss now, and then you're going to be angry. Okay, you entered a trade without doing your due diligence. Maybe there was no edge present for you. Your strengths were not present at that time in the market, and you entered that trade solely because of euphoria. You were not thinking clearly because of euphoria, and your hot streak that you were on has suddenly come to an end thanks to a big drawdown. Okay, and now you're left with trading on tilt potentially, and you're going to be very angry at yourself. I can tell you, I've been very mad at myself numerous times because I became euphoric in my trading, and it essentially led to very significant drawdowns. And it probably happened to me a good 3 or 4 times in the first 2 years of my trading career before I was able to before I learned how to overcome euphoria. And I will have a video out eventually on overcoming euphoria, and I'm going to do a deeper dive into that at a later point in time. Okay, so moving on, the consequences of finding success in trading. You can feel burnout and exhaustion. Okay, we are human. We're not a computer. We're going to eventually feel exhausted after a week or a month of trading where we put in a lot of time and effort, and we spent a lot of our mental energy focused on trading. Okay, personally, I start to feel burnout every December. I mean, I've been trading for almost 6 years now, and I've noticed when it comes for the last 3 years, I've noticed when December comes around, I am feeling mentally exhausted. And so I have learned that December, I take it really, really easy in as far as my personal trading goes. I'm seriously not looking to put on a trade in December unless it is an A+ setup in my eyes. And even then, I go in with half size that I normally would any other time of the year. Okay, it is stressful putting your own personal money constantly at risk in the markets because we never know what's going to happen. Okay, if you want guaranteed income, if you want, like, I guess, quote unquote, safe money, you should work an hourly salary because there's no safe money in the markets when you trade. Okay, and constantly being under that pressure to perform and to make money, especially if trading is a significant source of your income, and I don't know if yours is, it's obviously going to be varying from person to person. If trading is a significant source of your income, you are going to feel the pressure to perform consistently. And you have to know you have to know ahead of time that losses are a part of trading. You're going to experience drawdowns. You're going to go through those mental ruts, essentially, or those extended losing streaks of maybe 2, 3, up to 5 or more trades in a row of losses. And you have to be able to weather that mental storm. And obviously, as experience builds, you will be able to overcome that. But for me personally, every December, I am feeling exhausted. And so it is real. It is a thing. Learn what you can do to overcome exhaustion, okay? Take a step back from trading. That's why, for me personally, every December, I tend to take the month off to some degree. I'm not completely done trading, but I'm not sitting at my desk all day long or until I make my daily profit goal anymore, okay? I will be there at market open. I will see what the market's going to give me. I might look at my watch list before market opens and throughout the day, but I'm not in a rush, or I shouldn't say I'm not in a rush, but I'm not actively watching the markets. I'm spending my time doing something else, taking my attention and my focus away from the markets to give myself a mental break. Okay, and obviously it helps with December because I personally take that time off because the markets are going to be closed more in December than any other month through the year because of holidays. Okay, so it does help a little bit where I've planned my personal, my personal routine for the last few years around taking the month of December off to help me recover after basically 11 months of nonstop focus and pressure trading in the markets. All right, so moving on, personal growth. Okay, finding success in trading. Personal growth here. This is a positive that success in trading is going to bring you. Okay, you're going to learn to know your strengths and where you excel as a trader. There's something to be proud of if you know where you can place your money in the market to make money. That is something to be proud of because 90 to 95 and even up to 98% of the individual traders in the markets now that trade supposedly every single day, they cannot do that. Okay, it is very serious when the data tells you that 95% of traders fail. That is dead on. It is probably higher, up towards 98% in my opinion. The more that I watch people, and especially since COVID, the COVID crash, and where we're at today, I definitely think it's 98% cannot consistently make money as a trader. If you know where you can place risk in the market consistently and you have an edge and you are able to take money from the market that way, that is something to be proud of, and I want you to be proud of yourself for developing that skill for yourself because that is something 98% of other people cannot do. Okay, and you're able to excel at that. Also, personal growth, it can bring positive habits. Okay, you learn how to manage risk. Okay, you learn how to manage your emotions. There are positives in that aspect of life outside of the markets. Okay, and I don't want to dive into that because again, everyone is unique, everyone is different. But if you're able to manage your risk, your trading capital, really well, obviously your personal finances, your own checking account, your own savings account, whatnot, they're going to reflect that as well, just like your trading portfolio is going to reflect how you manage your capital. Okay. Last but not least, as far as consequences of finding success in trading go, your state of emotional control and continuous learning. Okay, you're going to be in control of your emotions if you're going to find success as a trader. That means you're not going to go down tilt. You're not going to let one loss bother you. Okay, and again, I'm going to start talking about life a little bit outside of the markets here. You're not going to let the little things in life bother you. Okay, if this one driver cuts you off or whatever, or flips you off as you're driving, you're not going to let that bother you. You're not going to let one minor inconvenience ruin your day. Okay, just like in trading, you're not going to let one loss ruin your day. One loss does not dictate how you approach the rest of the session. There are many times where my first trade of the day is a red one, and I've taken a loss to start the day, and I'm able to battle back and make that loss back 5 times over. I find it kind of funny how people will sometimes say they need their first trade to be a winner, or otherwise they're done trading for the day. Well, what good does that do to you? Okay, if you take a trade and you're a day trader and you take a losing trade at 15 minutes into the open, you have the whole day in front of you to make that money back. And the market usually is going to present you another opportunity within that same day after you took a loss in the first 15 minutes. Okay, I mean, there's a pretty good chance you're going to get another opportunity to make money after the first 15 to 20 minutes of the day if you took a loss there. But people will sometimes impose these self-limiting beliefs on themselves, and it does themselves no good. Okay, so when you're able to manage your emotions in the markets, it's a very successful, it's a very positive aspect of a successful trader, and it is another bedrock of trading success. Okay, another thing, continuous learning. Traders who find success, and this is going to come with success as a trader, you're going to be in a constant state of continuous learning. Okay, nobody knows for certain what's going to happen in the markets. Nobody knows how the market is going to react to a certain report or a certain earnings report or whatever. Okay, instead, you're going to be able to know that I don't know everything. Okay, as a trader, you will be able to tell yourself, and you know this, that you don't know everything. And you're going to stay in that constant state of learning, and it's going to prevent you from, how do I word this? It's going to prevent you from setting expectations, okay? And it can be really dangerous as a trader because you can end up telling yourself, I'm expecting this trade to be a winner, okay? Whereas if you're in a constant state of learning, and you're continuously learning from the markets, you're not going to tell yourself that this trade's going to be a winner. How do you know? The market didn't tell you that this trade's going to be a winner, okay? Fed Chair Powell did not tell you that this trade is going to be a winner. So if you're able to stay in a continuous state of learning from the markets, that is a huge, huge bedrock for trading success, okay? And people who are successful traders, they remain in a constant state of learning, okay? They manage their expectations really, really well to the point where they don't give themselves anything. They see the market, they watch the market, they see an opportunity that presents itself, and they execute on that opportunity without thinking twice. Okay, if it's a loss, they will learn from it, they will journal it, and if it's a win, they will obviously enjoy the win, but they will learn from that win as well. Okay, it helps reaffirm that in their subconscious that I know what I'm doing. Okay, I know where my edge and my strengths are as a trader. Okay, so I hope you enjoyed this video on the psychology of trading success. If you have any questions for me, feel free to leave them in the comments below. I will definitely get to them when I see them. And if you did enjoy this video, please like and subscribe to my new channel.